Hello, good afternoon. It's Adil Fazal here, bringing you a review of the US markets for the session Wednesday, the 25th of November 2015. Okay, interesting times indeed, interesting times. Okay, how do we interpret the US markets now, given the fact that we have concerns with regards to geopolitics, Russia versus Turkey? Also, we have the terrorism threat as well, given the fact that the threat has obviously been increased, given the fact that it's a US holiday, and certainly one of the most opportune times for these idiots, these terrorists, to strike. So it certainly is a concern, given the fact that obviously we already have a war of words between Russia and Turkey, and the whole situation certainly seems to be spiraling out of control. Uncertainty is very negative for the stock markets and generally is a risk-off scenario, and therefore markets are expected to go lower. Now, given the fact that we had stronger GDP data yesterday, that certainly supported the actual argument of a rate hike, and therefore a stronger dollar, and therefore obviously you are looking at weaker equities. Now, there is a conundrum of a strong dollar equals a low euro, and therefore all global markets start to short squeeze higher based on that thesis. But given the fact that we have terrorism concerns plus geopolitical concerns, that certainly does not hold true at present. Okay, and we have to face the market certainly. Well, the US market certainly short squeeze higher yesterday, even though we had concerns with regards to rate hikes, terrorism, etc., because of the fact that the rhetoric between the two were being downplayed. And one of the soldiers, or two of the soldiers potentially, had been rescued. So it certainly is an attempt to downplay it. But this morning it's totally U-turned again, i.e. the fact that the Russians have actually placed basically anti-surface-to-air missiles, basically to counteract any potential repeat of the situation yesterday where a Russian plane was shot down. So anybody who even attempts to do that obviously will certainly face a lot of resistance and obviously retaliation as well. So again, the whole concept, the whole thesis is that the war of words is increasing. The rhetoric is increasing on both sides. They've called it an act of terrorism. The latest comments thus far are Russian foreign minister has just said the shooting down of the Su-24 was a deliberate, planned act and ambush. Now, when you hear words like that, it certainly shows you that the relationship certainly isn't amicable, and it certainly is going to turn sour. And what are the repercussions and the consequences of that? So that certainly isn't a positive scenario. So again, risk off, uncertainty, fear, etc., etc. Okay, and that causes equities to fall. So if that's the case and that's the backdrop that we are trading on, let's try and decipher exactly what these markets are telling us in terms of price action. Okay, given the fact that the Asian markets are generally overall weak overnight, so let's see how this market responds. Now, in terms of economic data, the US today has mortgage applications very shortly. We have core personal consumption expenditure, personal spending, personal income. We have continuing jobless claims, durable goods, market PMI, so new home sales. So a raft of economic data, and it'll be interesting to see how the markets respond thereafter. Now, let's bring up the actual chart of the S&P 500 first and foremost, and let's see exactly where this market's heading from a technical picture. Okie dokie, right. So the daily chart of the Nasdaq, first of all, you can see that we are into that fib 75% resistance, and we are holding that level. Okay, 60-minute chart of the S&P 500, we have the resistance at 2095. 2094. So basically you are looking at resistance, and it's very hard for the markets to penetrate that given the risk-off concerns. Ever since we've closed that gap at 2099, the markets certainly have been weak. Looking at a 10-minute chart of the S&P 500, this key diagonal trend line is certainly holding well, and we are looking for further weakness today. That's basically my interpretation, and you are looking for a potential breakdown on the S&P 500 today. That's my expectations of the next move in this market. So again, observe, you do have support at 2082 and then potentially support at 27. So we shall see how the markets respond. Okay, the S&P 500 is always led by the Russell. So let's see what the Russell has to tell us in terms of the next market direction. The Russell on the 60-minute chart, you can see that we are testing the upper channel resistance, and we are testing horizontal resistance. and therefore you are looking at weakness. Looking at the daily chart itself, we've closed that gap. We are obviously approaching the resistance zone at 119.20, or double top resistance at 119.24. But at present, the 60-minute chart is showing you weakness. Now, looking at the 10-minute chart of the Russell itself, okay, you are from a 10-minute chart certainly obviously pushed higher, but you are into that horizontal resistance again. Now, trying to draw your diagonal trend lines. This is an intraday trend line, so see if we can match this. And looking for potential weakness here. Okay, so a potential here for a rising contracting wedge pattern. So that's something again that we're going to observe. Well, given the fact that we are into that horizontal resistance, you are looking for further weakness. Now, we do have an unfilled gap at 116 on the Russell, so therefore that will be acting as a magnet and will force price action lower. So bear that in mind, okay? So again, certainly indicating weakness on the Russell, and therefore looking for weakness on the S&P 500. Looking at the Wiltshire, let's bring up the Wiltshire indices as well, just to get a rough picture or get a better picture or a better insight as to the market moves. Again, it's still stuck at 75% fib resistance. Given the fact that we had stronger GDP, that certainly helped to a large extent to alleviate the concerns of terrorism and obviously geopolitics, given the fact that the situation between Russia and Turkey is escalating. It's not to do with Turkey and Russia as such. It's actually a war, a proxy war by the Americans versus obviously the Russians, and that's basically what the main concern is. So again, you're seeing the Wiltshire now into resistance and holding resistance, and therefore you're looking at risk-off scenario. Looking at a 10-minute chart of the Russell, or of the Wiltshire should I say, again horizontal resistance is being held and has failed to penetrate any higher. So again, it's confirming the weakness on the S&P 500, and therefore we are looking for lower prices. Now, looking at the Dow itself now, Dow Jones, again, looking at the daily chart, you are holding that resistance zone, a potential double top zone. Looking at a 60-minute chart, you have this lower high. Okay, so we are looking at this potential lower high on the Russell, on the Dow, should I say. You have horizontal resistance there, and therefore you are looking for potential lower low now, given the fact that we've put in a high, lower high. Looking at the Dow Transportation, again, certainly still remains weak. Look at your daily chart of the Dow Transports. First of all, you're again snapping back into that resistance zone, unable to push higher, so therefore again indicating weakness, and any rally will not be justified. So again, it's sold lower. Even if you push higher, you're looking at gap fill resistance before you go lower, and certainly is not a bullish sign. Okay, so the Russell, the S&P, and the Dow certainly all weak. Let's have a look at the actual Nasdaq now, and let's see exactly what the Nasdaq is trying to tell us as a potential next move. Okay, the Nasdaq itself, going to your daily chart of the Nasdaq, you can see that we've held that resistance zone at the 4700 region, and obviously I've been indicating weakness ever since. The Nasdaq itself, again putting in a lower high, okay, and now looking for a potential lower low going into today's trading session. Going again to the 10-minute chart of the Nasdaq itself, ever since we filled that gap, we've been selling off, and that gap level certainly is quite powerful. So any potential thrust here, you are looking at further weakness, okay? And from the Nasdaq's perspective, given the fact that gap level has certainly held, and like I said, looking for further weakness. So you are looking at support around the 4650. If that fails, then you're looking at 4625 support. Okay, that's your Nasdaq itself. So again, indicating weakness. Now, if we cross-reference that with your biotechs, you can see the biotechs resistance at present. If you cross-reference that with the semiconductors, and again, you're holding that gap fill resistance, and obviously it's indicating a weakness going forward. So that certainly is not a good sign in terms of equities itself. Okay, so as per se. So overall, my conclusion thus far, certainly indicating weakness. You can even look at the dollar index itself. It certainly is looking very weak, even with the stronger GDP data yesterday. It certainly is not moving higher at all. So any weakness in the dollar means a strength in the euro, and obviously strength in the euro indicates a risk aversion trade, given the fact that everything goes in the opposite and reverse direction. So again, that's certainly something to understand. Now, with regards to Shanghai, again, we're still stuck at the fib 75%, and the Nikkei obviously has been weaker ever since we've closed that gap on the Nikkei. So again, indicating weakness and indicating price action moving lower. That's my interpretation thus far. Now, commodities obviously have certainly fallen off the highs, post Russia, Turkish highs. and certainly are trading weak regardless of the geopolitical scenario. So, but even though if oil and commodities were to move higher, then it will be based more on the fair trade as opposed to organic and economic growth trade. Looking at your daily chart, you certainly have put in a potential pivot low, a double bottom scenario here at 40, and you are looking to potentially short squeeze higher, and that will be the name of the game, the potential short squeeze. As you can see here, that $43 level was rejected, and we've fallen in excess of $1 now, down to the 42 level. So again, all eyes on the price of oil, and certainly is indicating weakness at this juncture. Okay, and that certainly is a wrap in terms of US indices. Still remains weak, expecting weakness and looking for a potential move lower. That's my interpretation of US markets. Trade safe. Wish you the best for US session. Be sure to visit cfds.com for your trading needs. Goodbye now.